Good morning, good afternoon, or good evening, ladies and gentlemen. Today, I want to talk about a business that often presents itself as simple help in a financial emergency. Payday loans, cash advance apps, and check cashing. On the surface, the message is very clear: fast, simple, approved, money now. It sounds like relief. It sounds like convenience. It sounds like a quick solution when life gets rough. But underneath that surface is a much deeper business model. This is not just about getting cash quickly, it is about turning financial timing problems into a source of repeat fees, repeat use, and dependence on speed. Most people think of these businesses as emergency services if a check has not cleared yet, if the rent is due before payday, or if a utility bill hits at the wrong time. This lane looks like a bridge. The storefront says check cash, payday advance, money orders, ATM, all the language of access and immediate function. To the customer, it feels like a practical stopgap. But the hidden business is not just about cash. It is about charging people for access to money at the exact moment they cannot afford to wait. Instead of a strip mall storefront, the service now lives on the phone. Advanced cash apps feel smoother, more modern, and less intimidating than traditional payday lenders. The design looks cleaner. The language sounds softer, but the underlying issue is still the same. The customer needs money before the normal financial system catches up. So the app changes the tone and the interface, but it does not remove the timing problem at the center of the business. What is really going on is not just borrowing, it is timing arbitrage. These businesses make money because income and expenses do not arrive at the same moment. A worker may have money coming, but not soon enough. A check may exist, but not yet usable. An account may reflect income, but a bill still hits first. That gap between earned money and available money is where the business lives. The viable product is fast cash. The hidden business is monetizing delay. Payday loan storefronts make the model look local, accessible, and ordinary. The signs are direct. The promise is immediate. The customer is not entering a traditional bank or a long underwriting process. They are entering a fast cash environment built around speed and urgency. This is what makes this model so powerful. When the pressure is high enough, speed becomes more important than long term cost. The digital version markets itself emotionally. The message is simple. A small amount of money can show up quickly and relieve pressure right now. That makes the transaction feel light, almost harmless, especially when compared with the older Paleon image. But that is what exactly why this newer model deserves attention. It often looks less like debt and more like convenience. The customer feels helped by the app. The business still profits from the mismatch between now and payday. Financial technology softens the old model. Instead of a harsh storefront language, you get a friendly app and a calmer visual experience. The business feels more like a financial tool than a lender. But the core hidden model remains. You are getting access to money earlier than normal, and that early access becomes the center of the value proposition. So the app modernizes the feeling of the transaction, but it still lives off the same underlying reality. The customer cannot wait. Check cashing is slightly different from payday lending, even though it lives in the same ecosystem. Here, the customer is not always borrowing new money. Sometimes they already have the income on paper, but not in spendable form. The business charges to turn that paper promise into usable cash now. That means check cashing is not really creating income, it is monetizing access to income. It exists because for some people, a check is not the same thing as having money in hand. These services often cluster together: check cashing, money orders, payday loans, title loans, cash today. All of them live in the same financial world. They serve people dealing with urgency, weak credit, or thin cash reserves. This is why this lane is so important to understand. It is not just one product, it is an alternative financial ecosystem built around customers whose timing problems are serious enough that mainstream financial channels feel too slow, too far away, or simply unavailable. The final takeaway is that payday lenders, cash advance apps, and check cashing stores do more than provide fast money. They turn financial delay into a business opportunity. That is what makes this such a revealing hidden business model. The visible service is fast relief. The hidden business is charging for urgency, speed, and access to money before normal timing catch up. So the deeper question becomes this: are these services lifelines in a tight moment? Or are they businesses that grow strongest when people cannot afford to wait? Thank you.